is over for Tesla stock. Not in the sense of the stock is dead or it's dead money, but I think the sell-off is likely over or getting very close to being over. And I'll tell you why. First and foremost, you're hitting the 100-day moving average. This orange line, you're actually below that now at the time of recording this video. Tesla is down 30% from peak to trough. That has only happened 15 times in Tesla's business history, which it's not a super common thing to happen. And really the main reason here, it is the RSI, the Relative Strength Index. Now, anytime Tesla has sold off dramatically, it usually bounces about at 30. Okay, you're technically at 31 today, but that is almost essentially oversold. Now, anytime you get oversold on Tesla, and especially when it correlates right around that 100-day moving average or a major moving average for that matter, it's normally when you see a bounce. Outside of very rare exceptions, you normally bounce at the oversold level. Okay, a rare occurrence would be 2020 when you briefly hit an RSI that was around 24. Okay, the only other time you have not bounced at the RSI being around 30 was really back here during this whole sell-off in 2022, where Tesla ultimately was faced with a ton of different issues all at the same time. Elon Musk selling a bunch of Tesla stock to buy Twitter, the really erosion or just outright annihilation of Tesla's margins via what was almost daily, if not weekly, price reductions of Tesla vehicles. There was a lot of fear during this time. And even that in the broader markets, there was a 100% chance of a recession in the next 12 months, according to Bloomberg. That was really the only instance you have been this oversold. Now, yes, there's other smaller moments in time, like back here, what was this, January 25th, 2024, Tesla fell 12%, and the RSI did get down to about 17, which was just crazy. That only lasted for one day. The next day later, you started to bounce. Okay. So from that perspective, I think it's over for Tesla, or at least the vast majority of the selling is likely over for Tesla. Keep in mind, I'm not a financial advisor. There could be some disaster right around the corner for Tesla. You obviously never know, but statistics, probabilities would tell you you're more likely over the selling, okay, or very, very close to it. Now, also with the 100-day moving average at $335 per share, Tesla's currently at $333 per share. At the time of recording this video, I expect that we will find some support around this 330 level. If the selling is not over, things get a lot worse from here. I will give the bears that. If we do not bounce here, say the markets go into some kind of correction or something, then you're going to fall to that 270 level, which is right about your 200-day moving average. So in that scenario, you could still see theoretical downside of about 19%. But again, how likely is that, given the stock is now down 30%? Doesn't seem very likely. Now, here in this video, I will share with you all of your major headlines for markets today, what is driving Tesla stock lower, and much more. First and foremost, I think we are all aware of what is driving Tesla stock lower today, on top of the other things that we will discuss here in this video. Actually, some really good news as well. What's really driving Tesla lower is Elon Musk's bid to buy OpenAI. Now, it's a long, complicated situation with OpenAI because OpenAI has a nonprofit division and then it has a for-profit division. You can imagine this like Tesla, okay? Tesla, the entire entity of Tesla, could be compared to the nonprofit entity of OpenAI. Structurally speaking, it is the main entity. It makes the decisions, okay? It sets governance over Megapacks and Tesla vehicles and Tesla's robotics and FSD and AI endeavors, okay? You can imagine OpenAI's for-profit division being something like FSD or the robotics division. If Tesla wanted to spin off that robotics division, they could, right? You'd have to give that its own valuation and go through a spin-off process. Okay. It's a little bit different for a nonprofit because it's harder to value a nonprofit. But what Elon essentially did is say, we think the valuation for the nonprofit is higher than OpenAI thought it was, essentially. And the argument really is Sam Altman is trying to lowball the nonprofit segment of the business so they can spin off the for-profit section of the business for cheaper. And Elon Musk said, yeah, no, we think the valuation's higher. So essentially, I mean, it could become a bidding war if the courts open up a bidding process. And in that case, Elon Musk says that he will match any other bid. Who knows what the cap is on that? So that's the big concern that people have. This bid from Elon Musk and other investors worth mentioning is there is other investors here. It's not just Elon that's vouching to put up a full $97.4 billion for OpenAI. It's other people involved. I assume Elon is taking the largest lump sum, call it 20 billion, 25 billion, 30 billion. I don't care whatever number you put on it. The argument that I made in the video last night that I think is very critical that you guys watch as soon as possible to get a full understanding of this. But the long story short version is Elon Musk doesn't have to sell Tesla stock. Elon can go to any major bank in the world, Wells Fargo, Bank of America, name it. Okay, JP Morgan, does not matter, Citi, and they will give him a $20 billion loan to put collateral, up for his Tesla shares or for SpaceX or for XAI. He has so much money out there that even if his assets fall 90% in value, is not a risk of essentially default, right? Elon runs very successful multi-$100 billion corporations. Giving him a $20 billion loan would be like giving you a loan to buy an iPhone. Like it's a no-brainer in many cases because there's so much collateral that can back that. The issue would be if there is a bidding war, if Elon would have to put up more and more money. That's where it would be a little bit more difficult. Even thinking back to Tesla stock when it 2022 when there was all those issues going on and Tesla was 70% lower than where it is today. Like the total value of Elon's Tesla holdings were dramatically lower than where they are today, and Elon was going to get $50 billion loan or so to buy Twitter. So he did have to sell a chunk of Tesla stock because he was a little too risky at the time. I think the situation is just far different today than it was before. And again, there's going to be a lot of time between now and ultimately, likely even when a bidding process could open up. Sam Altman has apparently rejected Elon's offer, but the question really is now, does the judge open up a bidding process? And if they do, as Elon has requested with the courts, how does that go? Does Microsoft jump in? Does SoftBank jump in? Do they take Elon's side? Do they take Sam Altman's side? That's the real uncertainty here. And uncertainty is a problem, but we do have some relative certainties that this is probably not a 2022 scenario all over again. From a, pure money standpoint, you really don't need to sell Tesla stock if you are Elon Musk. Now, that's the first argument that I've made, because I don't think Elon has sold Tesla. He wants 25% voting power in Tesla. I mean, that's it's not very effective to getting that by selling your Tesla stock in the first place. Borrowing against your Tesla stock, well, you remain or retain ownership, if you will. Now, the second thing I will offer you is Tesla stock's already down 30%. Theoretically, Elon could have already sold. Okay. And if he already sold and at any point comes out and says, I sold X amount of Tesla, I have no plans in selling anymore, Tesla's going to bottom on that. So trying to time that announcement from Elon, if it ever comes, doesn't make a whole lot of sense to me. And then we have to revert back to what Tesla is doing in their business, because to some degree, none of this really matters for Tesla. Like Elon's selling, obviously that's not great short term if he indeed does sell. But like, what's the Tesla business doing? 2022, again, as I outlined, was very different. The business was struggling, from many regards. Nowadays, different story. Robotaxi's launching in June. The new Model Y is coming. FSD is entering the Chinese and hopefully European markets this year. I mean, optimist. There's so many positive things going on at Tesla that whatever Elon is doing doesn't take that away from Tesla. And that's ultimately the reason to be an investor anyways, regardless of what Elon does, as long as he, of course, remains the CEO. So following this 30% sell-off, to me, the risk of missing upside is starting to far outpace the risk of, losing on the downside. Now, the further we go from here, the lower we go if we do go further. If I am wrong and we do fall another 20% or so and retest that 200-day moving average, well, that is obviously a massive opportunity. But what are the odds of that happening given another 5% sell-off today and the RSI getting, again, towards historic levels where we almost always bounce? Not very high, in my opinion. With that said, we do have some good news today for Tesla. Tesla's FSD Supervised is now available in Mexico. So now another country where FSD is available. I would say that is a positive. Although, does Wall Street care? Not at all today. And it does seem like that is a common occurrence these days. Tesla gives us good news and the stock does not react to it whatsoever. CEO Jim Farley said President Donald Trump's proposed and implemented tariffs have added, quote, a lot of cost and a lot of chaos, although Farley said he believes the president aims to strengthen the American auto industry overall. Toronto Mayor Olivia Chow says she'll be moving a motion to ban Tesla from the list of vehicles which qualify for a $4.85 million licensing fee grant program aimed at encouraging taxi drivers to buy electric vehicles. This has literally no effect on Tesla. Tesla today has secured a new $225 million Megapack contract to install 430 megawatt hours of stationary battery storage to Genera to improve grid stability. And this is in Puerto Rico. As Sawyer Merritt writes on X, Tesla stock's current drawdown is about 30% from its high. There have been 15 other times in the Tesla history with 30% drawdowns. And he does go over some instances for that, but he says a lot is in store for Tesla in 2025. And I think this is what a lot of people are starting to kind of forget. The new Model Y launch, the more affordable models to launch in the first half of this year, first build of Tesla Semi at the newly built factory, pilot production of Optimus, Cybertruck rear-wheel drive launch, Cybercab production lines currently being prepped at Giga Texas, launch of FSD unsupervised, and initial robotaxi rides in Austin, Texas. And I will point out, Elon Musk said by the end of this year, you will have unsupervised robotaxi in many different cities, not just Austin, Texas. New Megapack factory in Shanghai, which just started production yesterday. Tesla's lithium refinery in Texas that is starting production. Powerwall 3 production ramp that continues. 500 kilowatt hour charging unlocked for the Cybertruck. And expansion of Tesla's Cortex supercomputer GPU training cluster at Giga Texas. Sawyer Merritt concludes with this. You can decide to either get worked up about the latest controversy or decide to drown out the noise and reaffirm to yourself why you're in Tesla stock. Holding Tesla stock long term is not for the faint of heart, but those who will probably be rewarded so as long as Tesla continues to execute on its goals. A lot of exciting stuff is around the corner with this company, so buckle up. And that's exactly it. I mean, people get so carried away in the latest thing going on at Tesla. You know, the latest controversy, the latest thing Elon is doing, the quote unquote brand destruction that Elon is doing. None of that actually matters for Tesla. Of course, unless Tesla started to fail in AI or, you know, something dramatic happened at Tesla, which none of that has occurred. Now, there was some news today in AI. You have the AI Summit in Paris, where the United States and Britain do not sign the Paris AI Summit Declaration on sustainable and inclusive AI. Trump is also making claims again that we are going to take Gaza, and Jordan's quote-unquote king will support Trump to achieve those goals. Ken Griffin says damage from Trump's tariff rhetoric is already done. And he does say thank you to Elon Musk for government spending cuts. We also had the first day of Jerome Powell's two-day testimony in front of the Senate, where Powell says he believes neutral rates have risen from their very low pre-pandemic levels, something we have heard many times before. Jerome Powell says they can maintain policy restraint for longer if economy remains strong and inflation does not move towards 2%. Then again, he also said if the labor market weakens unexpectedly, then they can cut rates pretty much instantaneously. So it was a lot of the same old that we've heard before. Powell was also asked about mortgage rates, where he again reiterates that the Fed doesn't control mortgage rates. Long-term rates control mortgage rates. But Jerome Powell says, quote, once we lower rates, mortgage rates will come down. But don't know when that will happen. And Powell says that the Fed would only use quantitative easing when rates are at zero. So outside of another terrible economic situation, we're never going to see quantitative easing again until that next big crisis does come. And Fed Hammock came out today and really just spoke a lot of nonsense. I don't think the markets paid too much attention to it. He says risks to inflation right now are skewed to the upside. I mean, I don't know where this guy's at or what economy he's talking about or what consumer, low-income consumers he knows, but everyone I know that does not make a lot of money, they aren't going for the whole raising prices thing anymore. I think people are over that. Now, in option activity for Tesla's stock yesterday, you had a positive order value of 89%. You had 382 different trades, totaling about $550 million. Today's number is definitely lower than yesterday, but still more positive than negative. Considering the stock's down about 5% at the time of recording this video, I think that does speak volumes. You have 493 different trades, totaling $491 million, with a positive order value of 58%. So you're still in positive territory. And overall, in the last couple of days and weeks, you've seen short sellers, one, start to cover on short positions, but you've seen option activity very bullish. Firms are actually adding to their, upside exposure to Tesla with options. Now you can see today about 800,000 shares are being covered on, which is a pretty good sign. Again, it's not the end all be all that the selling is over for Tesla, but it's a pretty good sign that hedge funds and institutions do not want to be as short in Tesla as they were previously. With that said, short interest of free float sits at 2.26%, $22.2 billion sold short in Tesla, totaling about 63.24 million shares that currently are sold short. And if we go ahead and pull up Tesla to get a look at the sentiment over on StockTwits, this is a really good gauge for kind of evaluating what retail investor sentiment is around Tesla more than anything else. And well, not a huge shocker. It's at 8. 8 out of 100. Some of the most bearish levels that you will ever see are actually happening today. Extremely bearish. Yesterday, you were only at 10. So really, it's just 2 days now of retail being extremely bearish. And as I've said previously, it seems like retail is panicking here. Hedge funds and institutions are actually adding that bullish exposure, which I think is notable to point out. Message volume today is high at 72. 1 day ago, it was high at 71. And the participation ratio today is extremely low at 2. Now, we do have overall a risk-off kind of market today. Russell 2000 is down 0.72%. NASDAQ down 0.5%. S&P 500 down 0.2%. The Dow is pretty much flat on the day today. The VIX is up about 1.5%. I think it's a combination of, again, some of those negative headlines that came out from the AI summit. Jerome Powell today actually gave the markets a bullish kind of spin. Markets took Jerome Powell's speech as positive overall, but then you've had more tariff kind of rhetoric from the White House today, and well, that's not exactly great. And we are gearing up for big earnings coming over the next 48 hours or so. Not super important earnings from a market cap perspective, but important earnings like Supermicro that does a lot of business with NVIDIA. You have Reddit, AppLovin, some of the biggest high-flying stocks in the last couple of months. Vertiv, right? Big AI name there, also reporting earnings tomorrow morning. Software AI names, Datadog, you could say Palo Alto, okay, Roku, Twilio, Coinbase, and others reporting earnings here in the next 48 hours. I think that's also making markets nervous. At the same time, we have CPI coming out tomorrow morning. And I think the mentality right now for a lot of Wall Street is sell first, ask questions later. Like if CPI comes in good tomorrow, buy the markets. But until then, don't be too exposed. Like that's what it feels like the narrative is around stocks recently. And I do think that presents an opportunity short term, as I believe CPI will come in on the low side tomorrow. Again, just my opinion. I will share more of that opinion in the next video, so stay tuned to the channel for that. Ladies and gentlemen, have a great rest of your day, and I will see you in the next one.